Not every investor is thinking about a possible stock market crash in the near future, yet a number of seasoned professionals are getting concerned about a massive stock market downtrend. Some experts are confident that a stock market crash might materialize in 2023. So, what should investor do in such a scenario? Hi, my name is Sunny and I make content that affect a common man financially. So, let's dive into today's topic, coming market crash 2023. If you're new to this channel, please subscribe to it alongside smashing that like button as that will help me with the YouTube algorithm, which of course will be highly appreciated. For sure, there is a mismatch between state of market and optimistic investor sentiment which could lead to major losses in months to come, especially as the Federal Reserve is tightening money supply by raising interest rates. Analysts are expecting rates to keep on going up, and some even believe that Fed will overdo it. So we all know the Fed raised rates throughout 2022 in an attempt to curb record high inflation, and now markets are pricing increase in federal funds rate by another 25 basis points in their next meeting. Under these circumstances, I believe S&P 500 could potentially fall in the first half of 2023 in spite of the optimism that we see right now with the retail investors. I foresee seven major risk factors where inflation remained enemy number one for investors, shoppers, and the Federal Reserve. With more rate hikes coming in 2023, S&P 500 companies now are reporting weak earnings, thus affecting their valuations. Geopolitical tensions worldwide, on the other hand, could even trigger a stock market sell-off. With collapse of FTX, global digital currency market lost market valuations close to $2 trillion from its peak. Remember, oil price shock has created recessions in the past which could come even now when we look at gas prices these days. Supply chain disruptions alongside China's zero COVID policy contributed immensely for increased inflation last year and can also trigger a market sell-off. Investors suffered a brutal 2022 when S&P 500 tumbled while the Federal Reserve was jacking up rates to smoothen inflation. US corporate profits are likely to slump as the economy slows and perhaps enters a recession. It could put more pressure on stocks because investors generally pay less for companies when their profits erode. As the euphoria leaves stock market, people start to question stock valuations, including their forward PE ratios. Now, to justify these lower valuations, stock will have to come down, and that's what I think will happen in 2023. I believe recession is coming. The question is about the length and the depth of it. Morgan Stanley is not alone in forecasting that markets will tumble in 2023, while several other Wall Street firms are predicting that S&P 500 will go lower before rebounding by the year end. Stocks will continue their slowdown into 2023, and we could see more market lows like the ones that rattled investors last year, according to experts from JP Morgan. Others are predicting underlying economic issues to have an overhang for companies and households in the US. I believe markets will face bigger and more frequent volatility, so these roller coaster like movements could stay high in the months to come with threat of looming recession, but maybe we have slower rate hikes. Big banks are predicting an economic slowdown is fast approaching. Euphoric stock market climbed higher this year despite economic data suggesting otherwise, so brace for more pain this year and beyond because of this disconnect. Banks are also tightening their lending standards, while the Federal Reserve remained the main culprit for increasing rates to slow down economy and eventually inflation. Although inflation has eased recently, but still remains higher than the Fed's desired target range. Most economists expect higher rates will increase unemployment in the US. Furthermore, short-term US government bonds have higher yield than long-maturing bonds, also called inverted yield curve, a warning sign that has occurred before every recession since World War II. As a disclaimer, I'm not a financial advisor. Please consult one before investing based on your personal financial situation. If you like the content that I make, please help me and my channel by liking, sharing, and subscribing to it. Thanks for watching and see you in the next one.